Okay, so getting straight into it. Improvement number one is entering after market open or looking for opportunities after market open. And I'll tell you guys why. Because last week, for example, 4 out of 5 trading days, the best trade of the day in alignment with my strategy played after market open, okay? That's not a coincidence. 4 out of 5 times, that's like 85% of the time this thing is occurring. So next week, we're going to be trying to watch price after market open, okay? So number one, entering slash for opportunities after market open, okay? And I'll go into this a little bit more. So like I said, 4 out of 5 times price played after market open. And because I'm coming to the markets at like 7:30 a.m. EST, New York time, I'm taking my losses or wins, for example. Sometimes I'm winning, yes, it's working sometimes. But for example, I've got 2 shots in the day, max 2 losses. So I'm taking them losses and using all my shots for the day before market open. Then I look back later in the evening and I see how the best trade of the day plays after market open. And an important thing that is really standing out and making me realize these things, like why the trades are playing after market open, is doing case studies at the end of the day, coming back and doing the best trade of the day. And it makes me realize, hold on a minute, the best trade of the day is playing after market open. This isn't a coincidence seeing it happening 85% of the time. So this is the thing that I'm going to test. Okay, and point number 2 is a very important one. Not marrying a bias, okay? Simple. What do I mean by this? When I say not marrying a bias, I simply mean, for example, yesterday on Friday, I was so certain them external lows were getting taken. 100% certain. And what happens? Price doesn't do it. And because price doesn't do it and then plays my exact TP and my strategy pitch perfectly, I missed that opportunity because I was so fixated on an idea that just didn't happen, okay? And that's ego. That's like, you know, yourself saying that you're right and the market's wrong. That's not right. You have to see what the market is telling you and then adapt, okay? So point number 2 is a very important point also. Not marrying a bias. Okay, and point number 3 is entering only if your strategy is present. And it might be like, okay, that's a very obvious one. But sometimes you forget, you know, and, you know, you take invalid trades. But sometimes having it written down and understanding that I will only take trades in alignment with my strategy is a very productive thing to do. So if it's going to help me out by writing it down and putting it into words and externally saying it to you guys online and, you know, making a verbal agreement like that, if it helps me, then I'm doing it, okay? So only following edge. Okay, that's a very simple one. I don't need to break it down too much. You guys get the point. Only if I see my strategy, only if I see my edge present in the market, then I will execute, or then I will look to execute. Okay, now point number 4 is when I go break even, make sure it is at a valid point. Break even, valid, okay? So what do I mean by that? For example, my trade on Thursday, right? It was a break even that went to 1 to 5, but I shouldn't have got break even. Number 1, I went break even too early. Number 2, my break even was at $24 into profit instead of break even, okay? So valid break evens, okay? I don't need to explain it more. I only need to go break even at a certain point. For example, a structural low gets taken. And when I take that structural low, or when price takes that structural low, I will go break even. I won't put it into profit, I'll go break even, okay? That's it. So that's point number 4. Break even has to be valid. Okay, and point number 5 is keep external pressure. So positive external pressure, okay? And I simply mean exactly what I'm doing right now. I'm making a verbal agreement to the external world, to you guys watching this video, okay? I'm making an agreement that I'm gonna stick to these rules, okay? I've also got a Discord community with a few of my friends, like 7 or 8 people. We all discuss our ideas, we all do our pre-market plans in there, we have group calls on market open. So what I've been doing recently in the last 10 days, it's a 30-day challenge that one of the boys in the community created. So pretty much you do your pre-market plan and you put your trades into the chat. And then the goal is to get to 30 days consistently without breaking any rules and completely following your strategy, okay? And recently I got to day 10 and broke my rules on Friday, literally yesterday, so I've got to restart the challenge. But also a very positive thing associated with that is external positive pressure, okay? People are watching me, people are seeing the trades that I take, people are watching my discipline when I do my pre-market plan, when I do my trading day recap, when I do my case studies, when I journal the trade. People are seeing this. So every single day for 10 days, I was doing my consistently pre-market plan, consistently trading day recap, consistently case studies. I didn't break it once. You know, even if it was 11 p.m. at night, even if it was midnight, I made sure I'd done it on that day because I've got positive external pressure. So this is an important point as well. External positive pressure in the right way is super beneficial. Okay, so I said it was going to be 5 points, but I'm just going to finish up on this 6th point here, okay? So, as we can see, it says case studies, pre-market plan, you know, trading day recap, deep journaling, okay? I'm going to break it down. So I kind of went over it in the previous point, but on a day-to-day basis, okay, I'm going to start with the pre-market plan, okay? As we can see here, pre-market plan, right? Me doing my pre-market plan has helped me out so much, okay? Because instead of just, for example, going into the markets, right? You go into the markets, you've done no pre-market analysis, you're kind of just going in freestyling. But when you have a pre-market plan and you've got, you know, an expectation and a bias for the day/session, then it's so much more clear. You've kind of got a framework to follow based on your analysis and based on your strategy, okay? So this is very important and this has benefited me a lot. And I'll humbly say, in the last week, almost every single day, maybe one day it wasn't correct or slightly wrong, but my pre-market plan was almost on point every single day, okay? My anticipation before the market opened and before I traded was pretty on point, okay? And this helped me frame my bias and my trades around that, okay? So a very important point, pre-market plan. And going on to the next one, you know, I could go straight to the trading day recap, okay? This is very important as well, okay? Because I know all the trades that I took, why I took it, my thought process, okay? What I was feeling in the moment, okay? All the mistakes that I made, okay? I take notes as well on all the little things, all the deep things, maybe, you know, just the tiniest things. Maybe I took a loss beforehand and that emotionally affected me for my next trade, and then I made the decision to not take the trade and the trade played. Just things like that, okay? So many things, and I note down every little detail. Every single little thing that I might think is even insignificant, I still note it down because data is so important to collect, even the smallest things, okay? And that goes nicely onto my next point of deep journaling, okay? When I say trading day recap, it's similar to deep journaling because deep journaling, I'm tracking everything. The time I entered, the minute I entered, the day, the amount of dollars that I lost, the notes that I've got, the trading day recap, the pictures of the trade that I took, and I break it down in detail, why I took this, etc. Was it valid? Was it in alignment with my strategy? Would I take this again? You know, was this valid? Was this at the time that I wanted to trade? So many things, okay? So these things alone are so important, okay? Then my next point and my last point of this video is making daily case studies, okay? What's a case study? A case study is simply, you come back in the evening, for example, when the trading day is over, okay? And you look at price and you see your strategy, okay? And you're like, in alignment with my strategy, where was the best trade? Where was the best opportunity for my strategy? And then you mark out in detail for, like, you know, however long it takes, 10 minutes, 15 minutes, 5 minutes, whatever, in detail, and you describe it so much like a flipping precision, if that's a word, but you deeply break it down and why you took that. And then you see all the commonalities over the week of your best setups playing out. Like, okay, for example, last week I see doing the case studies, I'm like, okay, every trade playing after market open, the cleanest trade in alignment with my strategy, they're all playing after market open. And then you notice these commonalities, and then going forward, you can use these improvements like I've made today, as we can see here, all these improvements for the next week, and then you just keep getting better. You see the things that you're doing wrong, like in your journaling, you see the things that you're doing wrong, and in your case studies, you see the things that you're doing wrong, you stop doing that, you do less of that, you see the things you're doing right, and you do more of that. This is why it's so important, point number 6, Trading day recap, deep journaling, pre-market plan, case study. Because you see the things you're doing wrong, you stop doing that. You see the things you're doing right, and you push more volume into that. So this is the 6 points and the 6 improvements for next week. I hope you gained some value from this video, from me documenting my journey. I hope you guys enjoyed this video as well, and I'll see you in the next one. Peace and love.